taking a look at chapter, and I'm calling this chapter 1B because remember we talked in on our first day class about chapter 1 a little bit. I called that 1A, and that was just an introduction talking about how managerial accounting is different than financial accounting, right? So just to review a couple of key points that we learned from last time, managerial accounting information, and this is part of your quiz, okay? I've already have this in on your quiz. There's a separate file with your quiz, a Word file. I'll put the Word file, but I'm also going to just start embedding them into the PowerPoint so then you can watch back later and see how we talked about the quiz questions. But I'll keep them in a separate Word file as well so that you can play with that Word file, like removing the indication of the right answer, etc., so you can work it, you know, without the answer being right there in front of you, the correct answer. You can hide the letters if you want to as well. But managerial accounting information involves gathering information about costs, and remember we focused on what? Planning and control decisions, right? Making decisions, planning, control decisions, and we went through that exercise where we sat there and said, well, you know, how long is it going to take me to recoup my cost of that equipment we were playing around with, right? Okay, good. Got down there? Oh, okay. Okay, so that's a little bit of a problem there, but you'll be able to figure that out. Thank you. Managerial accounting is different from financial accounting in that it does what? Managerial accounting includes many projections and estimates, whereas financial accounting has a minimum of predictions. I mean, we do use estimates in financial accounting, but what we are going to be making projections, estimates. That's a horrible question. That's the stupidest question I think I've seen today. I didn't pick that question. That question picked me. And when I say that a question picked me, guys, it often means that I saw something on your midterm that looked a lot like that, and I decided I better put it on there. They need to get rid of that question. The final is already predetermined. But I don't like this because financial accounting's got a lot of estimates too. I don't know. Now I'm starting to argue with the question. Let me put this on mute. No, what happens? Financial accounting has a lot of estimates too. What the life of the equipment is going to be, that's an estimate, isn't it? How much I'm going to actually collect on my account receivable. Remember we talked about that and we put an amount on the allowance for that? That's an estimate too. So this question, okay. But anyway, I would make note of it because if I put it there and I don't like it, there's a reason I put it there, okay? All right, so let's just go ahead then, and that's our little review of 1B, and let's start to get into some ideas of managerial accounting, okay? And when we talk about managerial accounting, remember we're saying that we are actually producing inventory that we will then sell. So we're not so much in accounting in A, we are really thinking about a retail entity. Retail entity like what? Nordstrom, Macy's, something like that. The inventory is already produced. We acquire it from somebody who manufactured it and then we sell it at retail, right? In B, we are focusing on the actual manufacturer's accounting. So we have to start to talk about costs that we will gather to determine what that item cost us so we know what we should sell it to then a retail entity that maybe later on will come along and buy that from us, right? And then sell it in their store. Or maybe we'll sell it direct to our customers. It doesn't have to be that you know, we're selling it to retail. So I think we're far enough away from lunch that you won't start getting too hungry if I talk about sandwiches. Okay. Do you ever hear the one, like, let's say a big guy like me comes up, or some guy comes up to me and says, hey, can you help me out with the sandwich? What would I say to him? Sure, where is it? Okay, never mind. Okay, let's think about that one. Okay, so what happens, you sit here and what? You have the situation where we're going to be producing sandwiches, let's say. And when we produce the sandwiches, we're going to track our cost through that, and we're going to track our cost into whether they are direct or indirect costs. Now, What distinguishes these two? An indirect cost, a cost is considered indirect if it is difficult to trace to the product. If it is difficult to trace to the product. So when we're making these sandwiches, let's think about the things that go into the sandwich and see how difficult it is going to be to trace the materials to the actual end product, the sandwich, right? So what do we have in sandwiches? Do we have bread? Got some bread in a sandwich. Mayo, okay. A little mustard. Huh? Filling. Meat. Little cheese. Put a slice of cheese on each sandwich. Huh? Tomato. Huh? Well, tuna is meat. You want tuna meat? Okay. Did you ever hear the one that says you can tune a piano, but you can't tune a fish? Okay. All right. So anyway, you can think about that one. The jokes come for free, guys. And if you don't like my jokes, you know, if my jokes were any good, I wouldn't be an accountant, right? So, okay. So just keep that in mind. I think this is enough. We got bread, we got mayo, we got cheese, we got tomato. Anybody dying for something else? Pickles. Okay. Okay. Let's stop. Okay, that's good. I don't want to make this thing too much. Okay, I know everyone. You want lettuce? Okay, however you spell lettuce. Knock, knock. Knock, knock. Knock, knock. Let us. Let us in and you'll find out. Jalapeno? Okay. Now you're really chest. Now you're really chest. So we'll just call it J's, okay? All right. So what happened? You guys know I can't spell. That's why I'm accounting. Okay. So anyway, we've got the materials now that are going to go into this sandwich, and we want to figure out whether they are direct or indirect. How about the bread? Bread is direct. Hey, every sandwich got 2 pieces of bread unless it's an open-faced sandwich in which you would only have 1 piece of bread, but we can trace it, can't we? You ever seen an open-faced sandwich? You never seen an open-faced sandwich? They put the bread on the bottom, there's no bread on the top, and all the stuff just sits there, right? And then I one time saw a cartoon that said the open-faced sandwich meets the faceless bureaucrat, and the stuff was just sliding down the guy with no face. Okay, so anyway, so open-faced sandwiches. These jokes make sense to you later on this afternoon. You'll be going, oh, I get it. Okay, all right. So what happens? We're sitting here, and we have what? We have the open-faced sandwich, which is 1 piece of bread. The regular sandwich is what? 2 pieces, but we can certainly trace it, can't we? And so that's a direct cost. How about the mayo? Well, that would be the problem. How much mayo on each slice? Starts to get a little tough to measure that, right? We're going to sit there and have everybody measure out a teaspoon at a time or whatever, a tablespoon at a time that they put on there. No, instead, what? They're just going to slather the mayo on that, right? So that cost is going to be considered what? Going to be considered indirect because we can't directly trace it to the sandwich, right? Okay, so we've got our direct cost, and we know our direct costs are hitting the sandwich. We're putting our indirect cost into this indirect. How about the mustard? Same thing. How about the meat? What's that commercial now? We got the meats. What is that? Arby's, okay. All right, so we got the meats over here, and so that's going to be direct, right? You can pretty much measure. Probably meat is already sliced. You're going to count 1 slice per sandwich, whatever. How about the cheese? That's going to be direct, you know, pretty much a slice per. How about tomato? It really depends on what's going on, guys. This is not, when you start getting into the detail of an actual situation in the book and stuff, it'll always be very clear whether we're talking about direct or indirect. But in the real world, when you're trying to do this, it really depends on how much effort you want to expend to try to track these. I'm going to think that tomato would probably be indirect. And now I'm using the wrong color for my indirect. But you could also, if you really wanted to get down to it, you could say, well, look, we put one slice of tomato, and, each tomato's got 3 slices to it. But that's not very easy to do because tomatoes aren't a standard size, are they? If you got those heirloom tomatoes, you ever seen those heirloom tomatoes? They're really weird shapes and colors and stuff. Really good tomatoes. I was telling my brother the other day, oh, man, these heirloom tomatoes, they're great. You got to try these heirloom tomatoes. He says, really? What do they taste like? And I'm like a really tasty tomato. I mean, it's not like it tastes like chicken or something. It's still a tomato. But anyway, okay. How about pickles? Probably indirect, okay? Again, unless you're going to put 1 pickle on the side of every sandwich. But if you got sliced pickles, you might put 2 or 3. Might be too difficult to trace. Lettuce, I'm thinking maybe indirect. Jalapenos, okay, just so everything isn't going into indirect, we'll put it over there. Again, if it's 1 jalapeno that you put on the side, much easier than if you're chopping them up, whatever, right? Okay? But you can see the logic here, guys, that what? Those items that are clearly, easily traceable to the product are considered a direct cost. Those that what? We're going to have to do a little effort, and if that effort gets so great that the company just decides it is not worth it to us to trace those costs directly, we put those indirect. And I think mayo and mustard would be a classic example there, right? Okay. Now, how then? Pretty easy to get the direct cost. Direct cost is what? $1 for the bread. I don't know. That's probably too much for bread. 50 cents for the bread. $1 for the meat. Okay, whatever else we put over here, direct, etc. We know that that's clearly going to go into the cost of our sandwich, isn't it? This is our sandwich cost. It's a sandwich. So we know what? We know that we are clearly going into our sandwich for the direct cost, right? How are we going to get the indirect cost in there? How are we going to get the indirect cost in there? Huh? It is going to be an estimate, but we'll call that estimation an allocation. We will allocate our cost to the sandwich based on, and it's going to be based on some factor that drives our cost. Okay, for example, we could use however many minutes it takes somebody to make a sandwich. That's how we'll allocate our indirect cost. So if we have indirect cost of, say, $1,000, how long should it take someone to make a sandwich? 5 minutes? Okay, so if it takes someone 5 minutes to make a sandwich, and in the course of a year, we typically produce, typically use up, say, 500 minutes to make sandwiches. How much is that per minute on average for us? Not a trick question. Huh? We have $1,000 of indirect costs, and it typically when we make the sandwiches during the year, we use up 500 minutes during the year, right? So we've got what? $2 per minute? $2 per minute, okay? And so what happens, if it takes us 5 minutes to make this sandwich, we would take the 5 minutes times what? Times the $2. That's kind of a lot, though. Obviously, I didn't think this through very well. 5 minutes times the $2 is a lot. It's going to be $10 that we would allocate to this sandwich, which is probably too much of an allocation realistically for a sandwich. So don't worry about, well, geez, $10 for a sandwich. The bottom line here is what? The bottom line is you're going to allocate based on what? Based on whatever the driver is of your indirect cost. And so we allocated based on minutes, and $2 per minute is probably too much. It should probably be something more like what? And I could have set it up, guys. I could have said in the course of the year we have how many minutes? 5,000 minutes. Then it would have been what? 2 cents per minute? Is that right? Is that math working? $1,000 times 5,000? Huh? 20 cents? Okay, thank you. 20 cents. Guys, this is not a movie that you're watching here. Okay, you're part of the show. So when I start having trouble with my calculations, help me out. Thank you, Steve. So now it's what? Now it's 20 cents times the 5 minutes. What's that come to? 20 times 5. That's $1. That's $1. Okay, so that seems a little bit more realistic for a sandwich that you'd allocate $1. But bottom line, what? You put those indirect costs into, you're really sort of putting it into this pool, aren't you? You put the indirect cost into a pool, and then you allocate it to a product based on some driver. We're saying that the driver is what? The driver is how many minutes it takes us to make the sandwich, and then we allocate based on how many minutes we took for that sandwich, right? Okay, so we've got direct costs, we've got indirect costs. Now, notice what we were talking about here were materials. These were materials to make the sandwich, weren't they? Okay, and some of these materials were what? Some of them were direct. The bread was direct. Some of them were indirect. The mayo and the mustard was indirect. The meat was direct. The cheese was direct, etc. Right? So we had direct materials and we had indirect materials, right? Okay. Can you think of any other cost that might have gone into the sandwich? Huh? The labor, right? I mean, we have to pay somebody to stand there and make the sandwich, don't we? Okay, good. We've got utilities as well. Okay, we don't expect people to make the sandwiches in the dark, do we? Okay, so what happens? Let's talk about the labor. Put the labor over here, I guess. Let's talk about the labor. Do you think we have direct labor? Whatever the time is that person spends making the sandwich times the amount that we pay them per hour. I guess we'd have to do it per minute in this case. But that's going to be what? That's going to be allocated to the sandwich. So we'd have to come up with an amount per minute that we pay the person, multiply that times 5. Okay, I'm not going to do the calculation for that. Can there be indirect labor? Right? The supervisor doesn't sit there and do what? Work on each individual sandwich. They say, hey, a little more bread on that one or whatever, right? No, that's not what they ordered. They ordered with cheese, whatever, right? Okay, so we have that supervisor, but they're sitting there and they're working on a couple different sandwiches at any point in time, aren't they? So it's too difficult to say, okay, you spent 2 minutes talking to that person and 1 minute talking to that person. Too difficult to trace, so we treat that as what? We treat that as indirect. It goes to the indirect pool, gets allocated based on whatever the driver is. In this case, the minutes it takes to make the sandwich, right? So now we're adding to our indirect costs. We've got indirect labor now. Okay, we got indirect materials, indirect labor. Okay, and then you said, sir, the utilities. Okay, so let's go ahead and let's set up another type of cost, and we'll call that overhead. Okay, utilities are overhead. Any other type of overhead? Huh? Rent, thank you, right? Hey, I taught my accounting my A class how to speak Hayward, right? Anybody here from Hayward? Anybody here from Hayward? Okay. So if I say to you, if you're from Hayward, and I say to you, hey, what's going on? What are you supposed to say to me? Ain't nothing going on but the rent. Okay. All right. That's how you speak Hayward. Okay. So what happens? The rent is what? The rent is always going on. So we got to sit there and deal with that. What if we own the building? Now, if we own the building, very good. What's your name, sir? Tim. Very good, Tim. If we own the building, what? If we own the building, then that's our depreciation. Now, you won't probably have rent and depreciation in the same problem because it's one or the other. You either rent the building or you depreciate. Although I see some problems where they have rent and depreciation, and I'm like, oh, maybe they're renting some office space somewhere. I don't know.
Now, if they own the building, they got to pay tax,
Property tax. There you go. Better add that property tax. What happens if they don't pay the property tax? The sheriff, yeah. The sheriff will be visiting you at some point in time to kick you out, right? There used to be this pizza place next to the gym that I used to go to, obviously, okay? And you probably were spending too much time in the pizza place, John. Okay, so what happens? This pizza place next to the gym, and I used to think that it was some sort of arrangement that the gym had with the pizza parlor and vice versa, because you'd be working out and you could smell a pizza wafting in there. And I'm thinking, I wonder if they're like I pictured some tube where they were wafting in. As long as they don't waft the gym smells into the pizza place, we're okay, right? So anyway, and yes, I am making this up as I go along. Anyway, so what happens? One day I, walk by the pizza place and it's gone. And I'm like, what happened? Guy didn't pay his property taxes. When I say the place was gone, the building was still there, but I mean the place is just wiped out. All the equipment's gone, everything. He wasn't paying his property taxes. He wasn't paying his payroll taxes. You should have seen it. Alameda County sheriffs came in, shut the place down. The guy pulled all the stuff out of there, right? So if you don't pay the property tax, so you got to pay it, don't you? Okay, and that's going to do what? That's going to go into our overhead account. We'll have a total amount in our overhead account, and we'll do what? We will allocate it to, where's my product? We will allocate it to my product, right? To my sandwich based on the hours, whatever it is. Okay? Okay, good. So we can see that we have what? We have indirect cost. We have our cost that cannot easily be traced. And they give us an example. Here's manufacturing overhead. We also had in our example what? Indirect labor and indirect materials, didn't we? Okay, so it could be any of those. Labor, materials, and then these basic standard overhead costs, like the rent and that sort of thing. Okay? Okay, good. Now we come over and we take a look now the way the book has contemplated that, and we have our three types of costs that go in, and if you look, guys, we really have those up there. We have labor, we have materials, direct and indirect, and then we have what? We have overhead, and overhead was pretty much always going to be what? Indirect by its very nature. Okay, so overhead is always indirect. There's no such thing as direct overhead. Overhead is always indirect, but we can have what? We have indirect costs, we have direct costs, okay? And our what? Our direct costs can include materials, our direct costs can include labor, right? Our indirect costs can include indirect labor, indirect materials, and then overhead is always going to be what? Always going to be indirect, okay? All right. They start to give us some examples, okay? A radio that's installed in this automobile is going to be a direct cost because you can trace each radio to each vehicle, can't you? Okay? You take and wages paid to someone who works directly on the assembly line. See how he's working on this one car? So we can trace the amount of time he spends there, right? And so that's going to be our direct labor. This whole thing in order for it to come on the audio. So bear with me for a second, because when I go back it erases what I said before. So we have what? We have examples of our indirect, which is what? Lubricants, the amount that we pay to the janitors, etc., right? Okay. But the big thing that I left off, notice we're talking about manufacturing overhead here. So our overhead, our direct materials, and our let me back up again. Overhead, materials, and labor are manufacturing costs, and it doesn't matter if they're direct or indirect. Let me say that again. Let me write it down, just because I should have pointed it out at the beginning here. Material costs, Material costs include, not material costs, manufacturing costs. Manufacturing costs. Manufacturing costs include labor, materials, and overhead. Now, it so happens that what? Labor can be direct, indirect, materials can be direct, indirect, and overhead is always what? Always indirect. But our manufacturing costs include what? Labor, materials, overhead. This is the cost that we put in to produce a sandwich, right? So that we have a sandwich at the end. We've got to have the materials, the bread, the meat, the what? The labor, the amount of time that the person spends on there, the overhead that we allocate, indirect, and the indirect labor and the indirect cost as well, right? Okay, that all goes into the product. Now there are also, and those are all considered manufacturing costs. There are also something that is called non-manufacturing costs. Non-manufacturing costs are costs we have to incur. However, those costs are not going directly to the product. For example, we have to pay our CEOs, our executives, whatever, right? I don't know what they do all day, but we have to pay them, right? Okay, so they need to be paid, and so we go ahead and have that as a non-manufacturing cost. Selling cost, we're going to take out some advertising, right? And so what are we going to do? When we take out advertising, we're going to go ahead and treat that as a non-manufacturing cost. Okay? So we got manufacturing costs. What are they, everybody? Our manufacturing cost? Labor, materials, overhead, right? And it can be both direct and indirect, can it? Okay, good. Then we have what? Non-manufacturing costs. Selling and administrative costs are our what? Are our non-manufacturing costs. Okay? Now, let me ask you this. Let's say we're going to take these sandwiches and we're going to do something to them, put preservatives in them or something, so that we can make all the sandwiches that we need for the whole year. They're going to frozen sandwiches, okay? They're frozen sandwiches. You ever ate a frozen sandwich? No. You never ate a frozen sandwich? Well, try them. Some of them are really good. You put them in the microwave. My dad loves those little frozen Newcastle. What is it? White Castle burgers. He gets the White Castle burgers, and then he does like weird stuff with it. Like he said, "Oh yeah, I got a White Castle burger, and I put a piece of ham on top of the White Castle burger." I'm like, okay, that's a hamburger. Okay, so what happens? We're sitting here, and we're going to make all of our sandwiches for the whole year, and we're going to freeze them. Let's say, right? Okay, so if we're making sandwiches that are going to be around for a whole year, do those sandwiches have future economic benefit to us? Those sandwiches have future economic benefit? Yeah. No? Why don't they have future economic benefit? I said, do the sandwiches have oh, I'm sorry. I thought you were saying no. Do the sandwiches have future economic benefit? They have future economic benefit because we can sell them for a year. So if they have future economic benefit, we're going to take these costs, whether they were direct or indirect, and we're going to put them into an inventory account, aren't we? Because now we have inventory of sandwiches, whatever it is, right? Okay, so the sandwiches that are done are going to be in finished goods inventory. What happens if we have some sandwiches that aren't done yet? In other words, we come to the end of the year and, we put the meat on top of the first piece of bread, but we haven't put the cheese on yet. Huh? That's going to be considered what? Work in progress. Good. Work in progress inventory, because it's not quite done yet, is it? And then as it's done, it'll go to what? It'll go to finished goods, won't it? Okay. What about the stuff that's still sitting in the refrigerator that we haven't even started to put into sandwiches yet? That's going to be raw materials. Good. That's my raw material. That's sitting there, and as we issue the raw materials into production, it's going to work in progress. As we finish those, it's going to come out of work in progress and go into what? Go into our finished goods, right? And so what happens? And I keep wanting to say product costs because those terms are synonymous, but I think the book tends to call it manufacturing. But our manufacturing slash product cost are what? Are items that get inventorialized. Say that 10 times fast. Get put into inventory out of what? Out of raw materials into work in progress into finished goods. And then as they are sold, where do they go? As we sell those items, we're just back to what you understood about cost of goods sold. You were all over that this morning, right? We just go back to what? To our cost of goods sold, debit the cost of goods sold, credit the inventory, right? That's our product cost, isn't it? Okay. Now, what happens with these our manufacturing costs? What happens with these non-manufacturing costs? Non-manufacturing costs, guys, by definition, are expensed. You always expense your non-manufacturing costs. They are just automatically considered an expense. You do not sit there and try and put them as part of your product cost. You just expense those, okay? So for those, you're going to do what? You're going to expense it, okay? And of course, as soon as I try to do something with it, it won't let me do. So you can remember that you're going to expense that, okay? Okay, so let's go ahead then and let's take a look at this question and see if we can answer it. And again, this comes from your homework based on what we have learned so far. So this is question number 5 in your homework, and I'm going to try this pen thing again. Okay, now I think it's okay. So how about raw materials? Is that going to be part of my overhead? Is raw materials part of my overhead? No, it's not, so I'm not going to pick that one up. How about indirect materials? Is that going to be included in the overhead? Okay, so we're going to go ahead and we're going to pick that up. That is going to be part of my overhead cost. That is going to be what? That is going to be then allocated to the product on an indirect basis, right? So we put all of these into overhead. How about my indirect labor cost? Going to pick up the indirect labor. Okay, that's going to be part of the overhead, all those things that are going to be allocated. How about maintenance of the factory equipment? That's, again, that's that indirect piece. How about direct labor? Direct labor is not, okay? So when we talk about our overhead, we're talking about what here? Anything that has to be allocated to the product is considered overhead for this, okay? So I kind of treated them as indirect, being indirect is a separate category there, but they are all considered our overhead costs. All of those are going to be considered overhead. Okay? All right, good. Let's go ahead and let's take a look at this blurrier question, okay? And which of the following would most likely be included as part of manufacturing overhead in the production of a wooden table? Okay, how about the amount of stain to be used in each table? Okay, amount of stain to be used in each table. You could probably measure the stain that you put on each table. Hey, you use half a can of the stain, okay, for each table. How about item B, the commission paid to the salesperson who sold the table? Well, first off, what? When we talk about manufacturing overhead, we are what? Not talking about sales. That's going to be expensed anyway, isn't it? Okay, and you could probably figure out the commission paid to each person anyway as a direct cost because whatever they pay get paid per table that they sell, right? How about the cost of glue? Glue is like mayonnaise, isn't it? Only don't eat glue. You can eat mayonnaise, but don't eat glue. But what? Other than that, it's what? Like the lubricant for the car or whatever? Okay. D, the cost of the wood used in the table, that's going to be direct material, isn't it? Okay. All right. So the answer here is C. Okay. All right. So that's the way you would study for that. That's the expectation is for you to understand which costs are indirect, which costs are direct. Indirect costs are treated as overhead. Our what? Our direct costs are traced directly to the product. We don't have to allocate those, right? Okay, good. Now you take a look, and when we talk about, and now they're calling it product cost, which is the same as our manufacturing cost. Our product cost, as I put up here, sit on the balance sheet, either in progress or in raw materials or what, sitting there in the finished goods. And then as we sell them, they go what? They come off of the balance sheet and go into the income statement in the form of cost of goods sold. Thus our little exercise the other day with the magnets, right? And I forgot to put those chapters up there to help you remember that stuff. So I'll make sure and put the couple of chapters from A to help you remember those things. But that's what we were doing with the magnets the other day. And then what? Then we expense, and our expense is our selling and administrative costs. We call those period costs because we expense them each period. Each year, whatever we spend on our advertising, whatever we spend on our CEO salary, etc., is automatically what? Automatically going to be expensed. Okay? All right. Now, a couple of different terminologies here, guys, and this is like here to annoy you. This language that they use is designed to annoy you, okay? We take our what? We take our direct materials and our direct labor, and we call those prime cost. We call those prime cost. And then we say that our direct labor and our manufacturing overhead are considered conversion cost as we convert our materials into whatever it is that we're making the sandwich, right? Okay, so it begs the question, well, why don't you just call direct labor and manufacturing overhead conversion costs and just call your prime cost direct materials? And my answer is, well, then you'd be ignoring the fact that labor is a prime cost, but it's also a conversion cost. Isn't it annoying? I don't know what you want me to tell you. I don't have much more of an answer than that. If you're waiting for deeper meaning, stop doing that. Okay? There is no deeper meaning. Direct labor has a leg in each of these. It's a prime cost because you can't make the product without it, but it's also conversion cost because it does convert the raw material into the final product, right? Okay, so direct labor has a leg in each prime and conversion. Manufacturing overhead is just a conversion cost. Direct materials just a prime cost. Okay, so what happens? We go ahead and we purchase our materials. Our materials go from what? Go from our purchase materials go from raw materials to our work in progress, right? So we got all those slices of meat and stuff sitting on the table, right? What happens? Out of the freezer into the table, and then what? Then we start to apply our labor as we make the sandwiches, and we start doing what? Putting the mayo, allocating the cost of the mayo, allocating our electricity bill, etc., to from our overhead, right? All of that goes to work in progress. If at the end of the year they're still in progress, we will have that as a work in progress inventory. If what? If the items are finished, they go to finished goods. If by the end of the year we haven't sold those items, they're still in my finished goods inventory. What financial statement are they showing up on? Work in progress, finished goods? They are on everybody? Good. On the balance sheet, and then as we sell those items, they go to, oh, it's right here. Hello. And then what? Then they go from the balance sheet to the income statement. Our selling administrative expenses are expensed each year, right? At the end of the year. Okay. Okay, good. So let's go ahead and let's take ourselves through a set of T accounts now, and we're going to follow the bouncing ball as we go through the T accounts now and watch how these transactions go through. So you start out with your materials purchased. So you debit raw materials, you credit cash, accounts payable, whatever, for those things that you bought, right? Okay. Then what? Then as you issue your materials, it could be both direct and indirect materials. If it's direct materials, it goes directly to work in progress. If it is a manufacturing overhead item, it's going, I should say an indirect item, it's going to go what? First to manufacturing overhead so that it can be then allocated to work in progress based on whatever the driver is, however many minutes it takes, or direct labor hours, whatever it is that we're going to use to allocate that, right? Then what? Then, can't do that. You see that we went ahead and we purchased the materials, we debited raw materials, we credited accounts payable, right? And then we're going to go ahead and use some of that. Use 43,000 of that 45,000, and what? 40,000 is direct, so it goes to work in progress. 3,000 is indirect, so it goes to the manufacturing overhead count, right? And it debits there, and then we go ahead and we credit the raw materials for we use. How much raw materials do we have left now? We have $2,000 of raw materials left, don't we? Okay. Okay, good. Then you come over and you do the same thing with your labor. Okay, you're going to debit your work in progress for your direct labor. You're going to debit your manufacturing overhead for indirect labor. And of course, we have to pay these people. We either would credit cash or we'd credit salaries payable if we are going to pay them later on, right? But we have to pay them, so our credit would either go to cash or to salaries payable. Okay, now you come over and you do the next one and the next slide, and we see now that we go ahead and do the journal entries for that. So we had 35,000 of direct labor, that goes to work in progress. 12,000 indirect labor, that goes to the manufacturing overhead, and we're going to allocate that, and we credit our salaries payable, right? Okay. Now you come over to the next slide now, and I know the burning question was, how is my manufacturing overhead going to get into my work in progress? Okay, so I've got my indirect materials, I've got my indirect labor, and then I've got my other overhead items, which I probably should have labeled that other overhead instead of just overhead. Those are our utilities, etc., right? Those are our other overhead items. And so those are all going to sit there in that overhead count. That's my actual as I incur my payments for my indirect materials, my indirect labors as I issued those. We saw the journal entry for that. How are we going to get this debit to manufacturing overhead? So if this is what? If this is other overhead, this is other overhead, and I pay my I take my depreciation entry. What's the journal entry for depreciation? Do I have to pull the magnets out? What's the,
Credit accumulated depreciation, debit depreciation.
Good, very good. What's your name again? Tell me.
Marcel.
Marcel? Very good, Marcel. So we're going to do what? We're going to go ahead and we're going to, in a what? Retail entity, debit depreciation expense, credit my accumulated depreciation, right? Okay, but I don't want to expense this because I'm trying to capture its cost in my inventory now, right? It's not just me sitting there depreciating my store at Nordstrom or Macy's or whatever. I'm going to do what? I'm going to put that in overhead count, and I want it to go to my product, don't I? Okay, can I make the sandwiches without a building? Can I make the sandwiches without a building? I guess I could be, but it's not going to be too good because I'm going to get sand in it when I'm sitting there outside trying to make the sandwiches, right? So usually you make sandwiches indoors, right? Okay, so I got to have this building, and so what am I going to do? I'm still going to credit accumulated depreciation, Marcel. Okay, still going to credit accumulated depreciation, but rather than credit accumulated depreciation, I'm going to debit depreciation expense, I should say. Rather than debit depreciation expense, I'm going to debit manufacturing overhead so that now sits in my manufacturing overhead account so that what? As I allocate my manufacturing overhead to my work in progress that you're going to see in a minute, as I apply it is probably the better word, as I apply it to my work in progress, it will go into my what? Work in progress inventory, to my finished goods inventory, and that won't hit the income statement until I actually sell that item, right? As what? As cost of goods sold. Okay? How about when you pay the utility bill? How's that going to work? When you pay the utility bill, let's say you receive your utility bill at the end of the year, PG&E, and it says you owe, I don't know, $1,000 at the end of the year. What are you going to credit when you have a bill? Accounts payable. It's a bill. It's a liability. It's accounts payable for my PG&E bill. Accounts payable. Good. What do you want me to debit here?
Part of it goes to manufacturing overhead, the other part goes to admin.
Yeah, if we had to do that, if we wanted to, very good. If we wanted to allocate it between our admin versus our overhead, we maybe would do that based on, I don't know, floor space or something. This much of our floor space in the building is the admin area. This much of our floor space is our production area, and we might allocate it that way. Okay, but just thinking about for our, let's assume we had a separate building, and we could track that differently for that separate building. So assuming this is just for our manufacturing, what do we debit, Steve? We're going to go ahead and we're going to debit manufacturing overhead, and then we will go ahead and overhead, and then we will go ahead and apply that to the work in progress based on however many hours we spend making this sandwich, this product, whatever it is, right? Okay, so we have our indirect, we have our materials, our indirect labor, we have these other items, and now we're going to go ahead and apply them by debiting, well, okay. Why didn't I just go to this slide when I gave you all those explanations that I just wrote up on the board? It would have been right there for me, right? Okay, but you enjoy it when I write it on the board, don't you? So we debit the manufacturing overhead. We do what? We credit all these different items along the lines. There's your property taxes. What was your name, sir? Omar, you wanted some property taxes? There you go. They got the property taxes as well, right? And they put that into that overhead account. So now what? Now we go ahead and apply on the next slide, which is going to be doing what? We're going to debit the work in progress for the amount that was applied, and it would be based on, and the common one is on direct labor hours. You use that as your driver. You take whatever your predetermined overhead rate is, which we'll talk about in another chapter, next chapter, and you might multiply that by the number of direct labor hours, and that is how you would apply, come up with the number, and then the journal entry that you'd make would be what? Would be a debit to work in progress and then a credit to the overhead applied. Okay? Question? Have we gathered everything in our work in progress now? We've got all of our product cost in work in progress, don't we? We've got our materials, we've got our direct materials, our direct labor, and then we've got our indirect labor, our indirect materials, but we had to apply those. We've got our other overhead, right? Okay. Okay, good. And there's the journal entry for that as we debit work in progress. And they used machine hours. See how they determined it was $3.50 per machine hour. They multiplied that by the number of machine hours. That's how they applied it. Okay. Okay. The non-manufacturing costs are going to be expense. We've said that like 4 times now. And there you go. There's the journal entry. Notice the takeaway from this is notice it does not hit my inventory account, right? Does not hit the inventory account. Okay, good. Now we come over, and as we finish those goods, we will take them out of our work in progress and put them into finished goods. So we will debit finished goods because now we are done with those. We put them in finished goods. We will credit work in progress to take them out of work in progress. Out of work in progress into finished goods, right? So now those costs have gone out of work in progress into, and you see the journal entry for that. Credit the work in progress for the ones that are done. Debit the finished goods. So the amount that gets debited to finished goods for the period is going to be what? Is going to be the amount that gets credited out of work in progress. You see that relationship? Because remember, guys, on the exam, we're going to have you jumping backwards through some of these hoops, right? So you need to understand this relationship. Okay, and there you see how they did that. Took that to the cost of goods sold. And there you see the journal entry. And don't forget to get your money for this, right? We're not just giving this stuff away. As you sell it, you're going to debit your cost of goods sold, and you're going to credit your finished goods as it comes out of finished goods inventory. Now this is A, isn't it? This is 101A. Now we're back to 101A as you go ahead and set up your receivable, set up your sale. Okay, now schedule of cost of goods manufactured, cost of goods manufactured, okay? And I am going to recommend that you memorize this schedule, okay? And you sit there and you say, memorize, oh, that's going to be really hard. It's a simple little thing. It should take you all of, with some effort, 10 minutes to memorize it, okay? So I'm going to recommend that you this thing because it's going to help you with your questions, okay? So what happens? First, you have your raw materials, right? And if you want to calculate what's going on with your raw materials, it's your beginning raw materials plus your purchases of raw material gives you raw materials available for the period minus your what? Ending raw materials will tell you the raw materials that ended up getting transferred out to the work in progress, right? Okay? Now, it's just like when we're trying to calculate our cost of goods sold. You can think of raw materials transferred to the next department as cost of goods sold. And remember in A, guys, I told you that you have to memorize that cost of goods sold formula as well, right? And I told you have to know it like a Catholic priest. Remember that? You have to be able to do this. Beginning inventory plus purchases equal goods available for sale minus ending inventory equals cost of goods sold. You need to be able to rattle it off like that. You can't stop and say, what was it? You know, the priests don't sit there and go, I mean, they know it, right? Okay, so you need to be able to sit there and do it like that. Well, you can do that same thing with raw materials. Beginning raw materials plus raw materials purchase equals raw materials available minus the ending raw materials equals raw materials transferred to the other department. It doesn't sound nearly as good, but it's what? It's got to be that sort of a memorization of it, right? Because in the exam, I'm not going to say, just give me the raw materials that were issued to the other department. I'm going to tell you the amounts that were issued to the other department, and then the stupid question is going to say, so what was the purchases of raw materials for the period? And that's when you're going to kick in this what? This approach that I've written up here on the board so you can work your way either up or down to figure out what we're asking for. And we're going to practice with that here in a little while to look at a couple questions that will require you to be able to do that. Okay? So we take our raw materials to our manufacturing costs. We're going to accumulate our manufacturing costs in our work in progress. This is a key thing. Okay? So you've got to memorize these. Let's see. Please don't mess up on me. See, when I'm away from the screen, from the computer for a while, it forgets where I had it, and that gets annoying. Okay, now I think I'm okay. So, I mean, you really got to memorize this slide. Okay, but you also have to memorize what are our manufacturing costs. Our manufacturing costs, you really already know, are going to be what? Our direct materials and our what? Our direct labor and our overhead, right? You know that those are your manufacturing costs. So we've got our direct materials and our manufacturing costs, don't we? And all we're doing is we're going to accumulate them here so you can clearly see that they're manufacturing costs, but your manufacturing costs were all debits to work in progress, weren't they? Didn't they all end up being debits to work in progress? My what? My raw materials went to a debit of work in progress. My direct labor was a debit of work in progress. The amount of manufacturing overhead applied went to a what? Debit to work in progress, didn't it? Okay, but we're just accumulating them here so you can clearly see these are our manufacturing costs, our direct materials, our direct labor, our manufacturing overhead, what? Applied, that's my total manufacturing cost, and that is going to go where? That is going to go, where's this going? It's going to be a debit to my work in progress, isn't it? There's the debit to my work in progress. That's my total manufacturing cost. So you should be able to, what? In a question, I might give you the beginning balance in work in progress. I'll give you the ending balance in work in progress. And I'll tell you the amount of what? Goods that were transferred out to finished goods, because that's going to be a credit to work in progress. You should be able to work back to the manufacturing cost, shouldn't you? I won't be so mean as to then go to a next step and tell you the amount of direct materials and direct labors and then make you tell me the manufacturing. That would be kind of mean, wouldn't it? Because then you'd have to get one number and then you'd have to start to back out the others, right? Okay, so, but you've got to be very good at this stuff to be able to do that. And then you have your total work in progress for the okay, and so what I did was I just went ahead and stuck some numbers in here to help you to understand this. So let's say this company just begins their operations this year. So we have 0 beginning raw material. We purchase raw materials of 45. Oh, this is the, geez, I forgot I did this. This is that other problem, isn't it, that we were just looking at? Right? Remember they purchased 45 and then they used up 43? Okay, so we had 43. The ending raw materials balance is 2,000, so we know that what? That we have transferred out, and this is sort of covering up, but we know we would have transferred out the 43,000, right? Okay. Of that, direct was what? 40. 3,000 was indirect. It went to the manufacturing overhead account, and it's going to be applied, isn't it? Okay. Then we stuck in our direct labor. Our manufacturing overhead applied. That gave us our total manufacturing cost, and we go ahead and we have that as our what? Beginning inventory and work in progress plus our total manufacturing cost for the period. Then what? That gives us our total work in progress, and then we have our ending work in progress, which this cut the slide off. I don't know exactly the amount was there, but that's the ending work in progress, and the amount that we transferred out goes to our cost, that's our total cost of goods manufactured, important term, cost of goods manufactured. The cost of my goods manufactured for the period is going to go to my finished goods. So if I ask you cost of goods manufactured, it's my beginning work in progress plus my total manufacturing cost for the period for the work in progress. That gives me my total work in progress for the period minus my ending work in progress. Means those things aren't done. Means the things that were finished were my cost of goods manufactured. Where are these going? Where are these going? These are going to go to finished goods, aren't they? Okay, so we go ahead and we take those to our finished goods. There goes my ghost dog story. Okay, and so I'm sitting over here with, is this the one we were working? Okay, all right, so I'm going to just work it up on the board so that we don't have to sit here and suffer as I go back and forth trying to make this thing work out. So we have 28,300, that's my beginning, okay, so I'll pick that up. Do they give me the ending? They tell me that the ending finished goods is 27,600. Okay, good. Then what? Then I go ahead and I have my cost of goods manufactured, which is the amount that gets transferred out of what? Out of work in progress and goes into my finished goods. So I know that that's the add for the period, cost of goods manufactured. How much is that? 58,500. Good. Now I have this total amount that's available, which is going to be what? 86,800, you say? Okay, good. And so if I know I have an ending inventory of 27,600 here, I know I had to subtract as my cost of goods sold. And the way I would do it is I would make a side calculation over here, which I would take my what? My 86,800 at that point, and I would go ahead and subtract off my 27,600 that I know is my ending inventory. Do I get the right answer here? 59,200? Okay, so, you know, they give you the solution down here, but I would set these up like this every single time. I have what? I have beginning. I know I had ads for the period. That was my cost of goods manufactured. I would then what? I would then go ahead and put in my ending inventory. I know that that has to be there, and I know that the subtract is my cost of goods sold. I do my little side calculation. I'm good to go on this, right? Okay. Okay, good. Let's go ahead and take a look at this next one now. And now they're sitting there and they're asking us what? Again, you look for what the question is asking you, and I'm not going to try and write on that because as soon as you touch the screen, it wants to advance. But we have what? Question number 4 here. Okay, and they're asking me the raw materials purchase. So as I said, your first step in these questions is always make sure you know what account they're asking you to analyze. So in this example, looks like I see my ninja approach didn't work on that chair, did it? Okay, so what happens? You're sitting here and you have your raw materials that you're analyzing. So you'd write down raw materials. And then again, you take what the problem gives you, B-A-S-E. You just take what the problem gives you. And we have what? Did they give me the beginning inventory for the raw materials? It's 547,000. Okay, good. Did they give me the ending balance? 610,000. I got that. Good. Okay, then what? They say raw materials used in production were 1,018,000. What are the raw materials purchased? So in this question, and now you're starting to see why I take this approach where I go ahead and label all the items that could possibly affect this account, because now we're running into a situation where they're making me work upwards, and this can get a little bit difficult. We just can't memorize, okay, you know, this plus this plus this, because it changes depending on what the problem's calling out to ask you, right? And so in this example now, they tell me the amounts that were raw materials used. So that's going to be what? That's a subtract from the raw materials account, isn't it? If we used them, it's a subtract from the raw materials account. So I go ahead and I put in that 1 million, what is it, 1,081,000 that got used? 18,000, excuse me. 1,018,000 got used for the period. Now the way I do these is I go ahead and I come up with a subtotal. And by that subtotal, the way I do the subtotal is I'll take the 1,018,000 and I'll add 610,000 to it so that I come up with a total there when I add those two numbers together of 1,628,000. I come up with 1,628,000. Thank you, Steve. And I have that 1,628,000, and I put that as a subtotal. And then I sit there and I ask myself, if this is my subtotal, 1,628,000, I subtracted what? I subtracted 1 million. That's a subtract, not a 5. I subtracted 1,081,000 from that, and I ended up with what? 610,000, didn't I? Okay, so how did I get from 547,000, my beginning balance, to what? To this 1,628,000. I had to add, didn't I? And the amount that I added, and I would do another side calculation over here, 1,628,000 minus the amount I had already, 547,000, means I must have added for the period, and the add for the period is what? 1,081,000. Is that the add for the period? 1,081,000. So I added 1,081,000 for the period so that I could get to this what? and I had the add, I could have written it here, to get the 1,628,000 minus the materials that were purchased for the period gives me the ending balance, doesn't it? Okay. That's the way I like to do it. They probably did something a little different. I don't know. I don't like to do it that way. I like to keep everything in front of me the way I'm doing, always remembering what account I'm analyzing, and then plugging in what they gave me. They gave me the beginning. They gave me the ending, didn't they? I just plugged that in. I'm using the ninja approach on here. Then what? Then they told me what they had sold for the period. That's the subtract. And then I just have to back into using a subtotal for whatever the missing item is, right? And you work every single question that way. Question? Okay, good. Let's go ahead and let's take a look at another one here. Let's take a look at the cost of goods manufactured. Cost of goods manufactured, again, you have to remember what accounts you're thinking about. Cost of goods manufactured is going to be affecting which account? Cost of goods manufactured is going to be affecting what account? When we look at this, the balance sheet is not an account, it's a financial statement, but it is on the balance sheet. But the cost of goods manufactured is going to be going off of the, going to be going into what? It's going to affect my finished goods, isn't it? Okay, and so what's going to happen? I'm going to go ahead and analyze my finished goods. And so you take a look at this one. Where's my eraser? It's in my hand. That will help. Okay, so we go ahead and we look at the finished goods. So I want to write down finished goods. I'm going to erase all this. And let's take a look. And I have my finished goods. And it's going to be B-A-S-E. And I look at the question. Do they give me the beginning balance? 3,200. The beginning balance? Okay. Do they give me the ending balance? They give me the ending balance of 4,000. Then what? Then I go ahead and I have to see, is it the add or the subtract that I want? It's the add or the subtract that I want. Well, we know that what? Cost of goods sold is the subtract, isn't it? I know that my cost of goods sold is the subtract. That's pretty easy to remember. And then, because you've memorized this, you would have known that the cost of goods manufactured is the amount that comes out of work in progress and goes into my finished goods for the period. So that's the add to the finished goods. So I go ahead and I start to do the calculation there. And again, I'm going to use a subtotal. So I have this 14,200, and what? I ended up with that after I subtracted from some number. I ended up, I should say, with 4,000. So what am I going to do? I'm going to add that 4,000. What's that give me? 18,200. So I must have had a what? A subtotal of 18,200 before I could subtract the 14,200 to end up with the 4,000, right? And now this is a piece of cake. If I started out with 32, how much did I add, which is my cost of goods manufactured? I must have what? Added 15,000, right? Now, I won't be so cruel as to, because I could have asked you something about what? Work in progress over here. If I give you the beginning balance for the work in progress, the ending balance for work in progress, and I give you your manufacturing cost for the period, you should be able to, what? Realize that the subtract would be to work in progress. Of course, I would have given you all the answers then, but I could have left out, say, the beginning balance of work in progress and made you go one step further. I won't go that cruel on you. Okay? Huh?
Promise?
Yes. I promise. If by some chance I make an accident, I do that, I'll tell you the answer. How about that? During the test. Okay? All right. Okay. Want to do one more? Or you've had enough of this? Oh, please, one more. Okay. Didn't we do this one already? Okay. That's in there again. How about this one? Have we done this one yet? Okay. Let's go ahead and do this one. Now, this one is what? Raw materials again. Are you getting bored? If you were accounting majors, I'd say, good, you wanted to be an accountant. You should get used to being bored. But business major in general is not that far behind the accounting majors. So if you want something fun and exciting, study an art class of some sort. Okay? All right. So the funnest thing about all of this is watching me look for my eraser. Okay. All right. Okay. So you know, I always used to think, oh, absent-minded professor, ha, ha, ha. Okay. The thing that I have to do 3 times before I realize that I have done it already is the power cord to my computer. I have to look for it 3 times. I look for it 3 times, and I keep finding it. Oh, it's already in my bag. Where's my power cord? Oh, it's already in my bag. Where's my power? Oh, it's already in my bag. Okay, and after that 3rd time, then I stop doing that. Okay, so what happens? We're sitting here, and we have what? Raw materials used. They want the subtract, don't they? So again, the process is know what account you're dealing with, raw materials, and then you use what? BASE. You use that approach, okay? And you just start taking Ninja, what the question gives you. Did they give me the beginning raw materials? They give me the beginning raw materials, so I'm just going to go ahead and plug that in. 21,500. Then what? Oh, what are we looking for here? The raw materials used. We're looking for the subtract, aren't we? Let me not use red for this because it's hard to see. We're looking for the subtract because that's the raw materials used, right? So it must be that they're going to give me the other ones. Where's the ending? Ending is what? How much? 33,000? 23,000. 23,000. Okay, good. Okay. Did they give me the ads for the period? Yes, they did. Thank you. See how kind they are? See how they just give you everything? Look at that. See how beautiful and kind they are to you? The question wants to just curl up in your lap and say, here I am, right? Okay, so we've got this 74,000. Now let's go ahead and get the subtotal. The beginning balance plus the 74,000 is what? 95,500, you say? Okay, how do you get from 95,500 to 23,000? We do our little side calculation over here. 95,500 minus the 23,000 means that I must have subtracted what? Huh? 72,500? 72,500, is that the answer? Yes. What about it? Because we're just trying to get the what? We're just trying to get the raw materials here, right? And raw materials is part of our product cost, part of our what do they call it in here? Our manufacturing costs. Whereas what? Office supplies, selling, and administrative are just expense, right?
So it's just thrown in.
That's correct. Yeah, it's a distractor is what they call that. It's do you know what you're doing is basically what this question's asking you, right? Yeah, you see that a lot in questions. Okay. Question? That's enough, isn't it? You can look at the rest of these. They're in there. Okay, we don't have to sit here and go through every single one of these. They're in there. They're on Canvas, right? And you can look at those. Oh, okay. I'll put it under the module. I thought I put it there, but yeah, I can put it there. I can do it at the break here. Huh? Chapter 1A slides she asked for. I don't know. I'll post it. Probably put it in the wrong place. Okay. Question? All right, guys. What time does this class get out? Huh? Right now? In 1 hour. Oh, okay. Okay, good. All right, that's perfect. I'm going to have to open up an account at Fremont Bank. Okay. So, well, it's sitting there staring me you can't see it. It's staring me in the face all the whole time. Okay, so let's go ahead and take a 15-minute break, reconvene at 12, and then we will go ahead and wrap up the slides for Chapter 2. I mean, for 1B. Okay? All right, guys. Let me just go ahead and resume the recording here. And we've already seen this slide, so this is a repeat slide. So let's just go ahead and go to the next one. Okay, and let's talk about cost behavior. Okay, so we've seen that our costs can be what? Our costs can be direct. Our costs can be indirect. We had our what? We had our manufacturing costs versus our selling and administrative. But now we're going to go ahead and start putting different labels on our costs. And we're going to talk about variable cost versus fixed cost versus mixed cost. Okay? So we erased our costs now that we had up for our sandwiches, but just we can probably remember, and we're getting closer to lunch, so we can probably easily remember the ingredients in a sandwich right now. So variable cost will change with the level of production. Okay, variable cost will increase or decrease depending on our level of production. Okay, so if we produce a lot of items, our variable cost will do what? Will increase. If we produce lesser items, our variable cost will decrease, right? Fixed costs do not change with the level of production. They stay the same regardless of the number of items we produce. And we'll talk about mixed costs here in a second. But let's just focus on variable and fixed real quick. Go back to the sandwich example. Is the bread in a sandwich a variable cost or a fixed cost, do you think? Try again. It is a variable cost because the more sandwiches I produce, the more bread I have to use, right? Okay, so if the bread costs me $1 per sandwich and I produce one sandwich, one sand, what's my total variable cost? What's my total variable cost? $1. Okay. If I produce two sandwiches, if the bread is $1 per sandwich, and I produce two sandwiches, what's my variable cost? $2. So my total variable cost will increase as I produce more items, right? How about three sandwiches? It's $1 per sandwich. I produce my third sandwich now, and so my variable costs are what? $3, right? Okay, how about the bread? How about the bread? I mean, the meat. We already asked you the bread. How about the meat? Same thing, right? How about the cheese? Same thing. So our direct costs tend to be what? Tend to be variable costs, don't they? Okay. Okay, good. Our direct, how about the labor? Direct labor. The more what? More sandwiches I produce, the more labor I need. So our direct costs tend to be variable. Can someone close that, please? I can't stand listening to people having fun while I'm trying to work at something. Okay. All right. Okay. So, how about the mayo? Now, mayo is what? It's an indirect cost, right? It is an overhead cost, but is it variable or fixed? It's variable. The more sandwiches you make, the more mayonnaise you make, right? So now we've had what? Now we've had our direct costs for our materials, our direct costs for our labor, our indirect costs for our materials are a variable cost, aren't they? How about the supervisor's salary. Okay.
Well, I'd say it kind of depends. If they're on salary pay, then it's fixed. If they're on paid by the hour, then it's probably variable.
Okay. I'll tell you what. Yes, sir.
But the busier you get, why don't you need to hire more supervisors?
The busier you get, the more you'd have to, more supervisors you need. But let's stop on that one. Let me come back to the supervisor. Let's do an easier one, okay? Because you guys are all, your sense is right. There's something special about something like the supervisor. So let's hang on to that thought, and let's go with an easier one. How about the rent on the building? The rent is fixed, isn't it? Okay. How about depreciation on the building? That's going to be fixed. Okay, good. Now let's go to the utilities. How about the utilities? Now you're saying variable because what? Because you're saying, hey, more sandwiches, more electricity for the sandwich warmer or something, whatever, right? Which is true. Okay? But PG&E will still send you a bill if you sat with all the lights off in the house and never turned anything on. There's a what? There's a fixed component to that. They charge you for the fact that they're providing you the service, right? Okay? Think about your cell phone as a better example. What happens with the cell phone? Even if you never use 1 minute of time, they're still going to charge you a monthly fee just for the right to have the cell phone, aren't they? So a cell phone, what, has a fixed component, and then the more you use it, it starts to have a variable component, doesn't it? So we call those mixed cost. With mixed cost, what? There's a fixed component, and then as the activity starts to go up, there's a variable component as well. We call that what? Mixed cost. Now go back to your supervisor. Your supervisor is going to be a mixed cost because what? You're sitting there and you have, 10 sandwich makers. You only need one supervisor. When you go to your what? You go to your 11th, actually, a supervisor like that could actually be a step cost. With a step cost, the cost is straight like this, so it's fixed for a while, and then you add the 11th employee, you need to hire another supervisor, what happens? It goes up, and it's good there for employees 11 through 20, whatever, right? And then you add that next person, you have to add a third supervisor, and it goes up again. So I think supervisor actually, now that I think about it, is better described as a step cost because it goes up at certain increments, isn't it? Okay? So your utility would be a true mixed cost, wouldn't it? Your utility would be a mixed cost. Your what else might be a mixed cost? Both variable and fixed components. Well, utility is probably the best example. I want to force myself to come up with another example. When I've got utilities there, sitting there is what? It's got a mixed and a fixed, I should say, and a variable component. It's mixed, right? Okay? So think about this. Your direct labor is going to be a what? A variable cost. Your what? Your direct materials is going to be what? Variable cost, right? Your manufacturing overhead, okay? Your other manufacturing overhead items tend to be what? Your manufacturing overhead items tend to be either fixed or what? Or variable, right? And they could even be what? They could be, I should say, mixed or fixed, right? They tend to be fixed or mixed. The depreciation and what? The utility bill, right? Was mixed. And then, of course, the depreciation, whatever, was fixed. Okay? So,
transportation be a mixed cost?
Transportation?
Like just driving from, let's say, your location to somewhere else, like just doing business, like your own car, or because then you would have, like, the variable cost would be gas, and then the fixed cost would be the cost to rent the car or purchase the car.
Yeah, although I would imagine you'd be able to break that into its fixed and variable components pretty well. Whereas with the mixed portion we're probably going to have to use an allocation for mixed cost, or depreciation, those sort of things. Even the what I thought you were going to say when you said a car is like the taxi cab. Taxi cab is a good example of a mixed cost, right? In that the minute you get in, they charge you some, and then how far you go, they add on to that, right? Would be another example of a mixed cost. Okay, so we've got these three categories: variable, fixed, and mixed cost. Okay, and okay, this is a very important slide because you're going to get questions that are going to expect you to know this. Okay, so what happens? Notice that my variable cost, my total variable costs, increase and decrease with the level of production. And just as I put up here on the board here, my total variable cost for one sandwich was $1, for two sandwiches $2. As the level of production increased, my variable cost increased, right? If I went from what? My total variable cost increased. If I went from what? From 3 sandwiches to 2, the variable cost would decrease, wouldn't it? Okay, so the total variable cost goes up or down with the level of production. Notice that the variable cost per unit stays fixed, doesn't it? The variable cost per unit is $1 per unit regardless of how many sandwiches I produce, right? Okay, so while the total variable cost increase and decrease with the number of units, the variable cost per unit is always the same, isn't it? Okay, now fixed cost is a mirror image of that. When I'm dealing with my fixed costs stay the same regardless of the level of production, don't they? If I produce 1 unit and my fixed costs are 100,000 and I produce 1 unit, what are my fixed costs if I produce 2 units? 100,000 still, right? Okay, produce 1 unit. If my fixed costs are 100,000, I produce 2 units, my fixed cost will be how much? 100,000. By definition, they're fixed. They don't change with the level of production, right? Okay. But what happens? On a per unit basis, my fixed cost per unit decrease with the level of production. So what happens? Per unit basis, if I produce 1 unit, what's my fixed cost per unit if my fixed costs are 100,000? If I produce 1 unit, fixed cost per unit is 100,000, right? You just take the 100,000 divided by fixed cost per unit, divided by the 1 unit. That equals what? 100,000 is my fixed cost per unit. If I produce 2 units, what's my fixed cost per unit? I'd now take that 100,000, I divide it by 2 units. My fixed cost per unit is what? 50,000, isn't it? So my fixed cost per unit decrease as I produce more units, right? Okay. What happens? Number 3, what if I produce 3 units, I should say? My total fixed costs are still 100,000, but my fixed cost per unit now is what? 100,000 divided by 3 is $33,333.33 or something stupid like that. Whatever. Right? Okay. That's it. Now, let me ask you this then. Since my fixed costs per unit are coming down as I produce more units, and what? And my variable costs per unit are staying the same, what's happening to my profit as I produce more units? My profit is increasing, isn't it? Because what's happening? I'm sitting there, my variable costs, I should say, per unit are going to be the same, but my fixed costs per unit are coming down, aren't they? So if I produce 3 units, and I'm sitting here producing 3 units, so my fixed cost per unit is 33,000, 333, whatever, and my variable cost per unit is $1, and I produce those 3 units, that means my cost per unit is what? Is going to be $33,339, whatever, is my cost per unit. So as I produce more items against my sales price, I'm going to have a bigger profit, right? If I was up here, my cost per unit is going to be $100,003 per unit, and so I'm going to have to sell an awful lot more of those at a higher price to to have my break even, right? Okay, so this is the most important slide here that you need to know for this stuff. And let's just go ahead and take a look at a couple of questions. Which of the following costs, if expressed on a per unit basis, would be expected to decrease as the level of production increases? How about sales commissions? Sales commissions are a variable cost, aren't they? The more items you sell, the more your commissions. The less items you sell, the lower your commissions you have to pay. Commissions is what we pay per sale, right? How about fixed manufacturing overhead? Fixed manufacturing overhead is going to vary on a per unit basis, right? Okay, and it's going to decrease as the level of production increases. As our sales increase, assume our level of production increases, right? Okay, so what's the answer here? B? Okay, do we dare? Do we dare to try it? Okay, good. So B's there? No, we don't dare. God, that's annoying. Okay, there's got to be a way for me to turn that off. If anyone knows how to turn off the screen from advancing on touch, that's the problem, because as soon as I go to write with the pen, it thinks I'm trying to touch it, and it wants to switch over. I'm going to have to call Microsoft and see if they got an answer for that. Okay, so what happens? We have our opportunity cost. Okay, what is opportunity cost? And you see this person with the graduation gown, whatever. Whether you know it or not, right now you are incurring an opportunity cost, because you could be out somewhere making a Hollywood movie or something, right, and earning money. Instead, you've decided to do what? Spend your time sitting learning, and so you've lost the opportunity to star in that Hollywood movie right now, haven't you? So that's an opportunity cost, right? So if someone comes up to you and says, "You're the face I'm looking for my Hollywood movie," and you say, "Nope, got to finish my education," whatever you could have made being a movie star in a Hollywood movie is an opportunity cost, right? Right? Okay. Okay, now that is different than a sunk cost. A sunk cost is the amount that you have already spent, and therefore it is not relevant to your decision process. Okay? Now, opportunity costs are relevant to your decision process. Remember, in this class we're making decisions, right? Opportunity cost is relevant to your decision making. So what happens if the person sits there and says, "Oh, come on, I need you in that movie, I'll pay you $10 million. Now that opportunity cost has become very relevant to you, hasn't it? And you'd probably say, I'll get back to the education. Maybe someday you'll be sitting in your mansion saying, but all I ever really wanted to was to be an accountant, and you can come back later and, get your accounting degree, whatever, okay, transfer to the university and get the accounting degree, all that kind of good stuff. But right now, you decide, I don't want to incur that opportunity cost anymore. I'm going for it, right? And so what happens? The opportunity cost was relevant to your decision. With me so far? Okay. Sunk cost is amounts that you've already spent, and they are not relevant to your decision. For example, same scenario. Hollywood director comes up to you and says, "I want you to star in my movie. I'm going to pay you $10 million. Okay? And what happens? You would not sit there and say, "Oh, no, I can't take that because I've already spent, $8,000 on my education. I've already spent $8,000. I only have 1 year left to go before I'm going to finish my education or something, and I don't want to lose that $8,000 that I've spent." Would that be a relevant relevant to your decision? You'd say, "Okay, well, what are you going to do for me? That money's gone already. I can't get it back. And so what do you want? What are you going to give me?" And the guy says $10 million. You don't ever think about the $8,000 ever again, right? Okay, that's a sunk cost. So, takeaway, opportunity costs are relevant to decision. Sunk cost, forget about it. Like they say, what do they say in New York? Forget about it. Don't worry about it. Okay, it doesn't matter. Okay? Okay. So a sunk cost is a cost which may be saved by not adopting alternative. It's gone, isn't it? That's the opportunity cost, right? Okay. A cost which may be shifted to the future with little or no effect? No. I mean, question's almost, can you read? I mean, if it says sunk, then you pretty much don't think it's going to be in the future, right? And then what? C, a cost which cannot be avoided because it has already been incurred, right? Okay, good.